Hi there, and welcome to this piece of the puzzle. In this video, we will be focusing on AMD, accumulation, manipulation, and distribution. Let's get into it. The first part, accumulation, is where price just sidewinds. Doesn't go anywhere, it accumulates, it oscillates, it stagnates, it sidewinds. There's no volume, price is just pretty much dead. After the accumulation phase has taken place, we get a manipulation leg or a manipulation phase where price then takes out, let's just for this instance, takes out a low. It manipulates into a certain area, either a low or a high, and then it'll either come back to equilibrium or maybe stop at the bottom or just go back higher. And then on the last part, the distribution phase is where price is now allowed to go in the intended direction. So price can either take out the low, come back to the middle roundabout, and then continue on down, or even price can continue on up. Price is now allowed to go in a certain direction. Why this is important? Accumulation, manipulation, distribution gives us a framework in how we can approach price in a specific schematic. Now, let's break it up. And I think a lot of people don't apply the next knowledge, which I'm going to share, to AMD, or at least share the knowledge, I guess. So let's break it up in timing. So this is pretty simple to understand: accumulation, manipulation, distribution. But how do I apply it? How do we apply this to the charts? Price is fractal. With that being said, let's just zoom out a bit and use it on a daily time frame. So this would then, for just this example, this will be Asia. So this will be Asia. This will be London. And this will be New York AM. There's a reason why I do New York AM. Stick with me. So Asia accumulates in this example. London comes in, volume gets introduced into the market. Hedge funds orders needs to be loaded. All the fixes needs to be targeted. After London has done its part, taking out either Asia low or Asia high, price is now allowed to build up and move into the right direction or the intended direction. And when New York comes, the distribution phase takes place. Now, this is just one example of how you can apply accumulation, manipulation, distribution. Another one, let's zoom in a bit. So if this is a whole daily time frame, or at least 2/3 of it, let's look at the last part of a trading session. So let's say this is lunch, New York lunch. This then will be New York PM 1. It's just the first part of the PM side. And then this will be New York PM 2 for this example. New York lunch accumulates. The next phase or next cycle manipulation takes place and takes out New York lunch, which accumulated, and then in the last bit it distributes. Now still, this just gives you a half a framework. Let's put this into time. Yes, this is time. Let's put a number on it. So let's just stick with this example. The futures market closes at 4 o'clock. So let's do this. This is when the future market closes. Now, if that is when the future market closes, I just want to see if you guys can see that. Let's go over here. Let's put it there. If the future market closes at 4 o'clock, let's break it down into 10-minute cycles, 30-minute cycles, 90-minute cycles. The reason for that is we're working in a framework of threes: accumulation 1, manipulation 2, distribution 3. So if we take, that's the beautiful thing about the fractalizing part of this, or applying this knowledge to the markets. You can find an accumulation zone of 10 minutes, a manipulation zone of 10 minutes, and then a distribution zone of 10 minutes. Accumulation zone of 30 minutes, a manipulation zone of 30 minutes, and distribution zone of 30 minutes. Let's just use that for an example. So if we backtrack, actually, I want to start here. So let's just work from 11:30, go to 1 o'clock. That is a 90-minute cycle, 90-minute cycle. And then from there, another 90-minute cycle would be then 2:30. And then the last part then would be from 2:30 to 4. Each time is broken into a 90-minute cycle, just to be able to, I want to say, put it in a framework. We're looking at 90-minute cycles, and then another 90-minute cycles, and then another 90-minute cycles. I just want to give credit where credit is due, who taught me this. It is Zusi. Frank, if you ever see this video, thank you so much, brother. I appreciate your work. God bless you, my guy. But nonetheless, breaking it into time cycles makes it so much easier to approach the market within a specific framework. Now, how do we piece the first puzzle and the second puzzle together? So firstly, accumulation, manipulation, distribution, very simple to understand. Price accumulates, manipulates, and distributes in a certain direction. Now you put that into a timing aspect. From 11:30 to 1 is New York lunch, and then for the next 90 minutes afterwards it manipulates, and then the last 90 minutes it distributes in a certain direction. This is not a fixed structure or schematic. We have to identify it as traders. Asia, you can look at the whole of Asia as an accumulation zone. That's how I do it. And then London, Frankfurt or London manipulates. And even if that doesn't manipulate, the manipulation leg takes place at New York Open, and then the latter half, or when lunch kicks in or after lunch, is the distribution zone. Break it down into bite-sized pieces: accumulation, manipulation, distribution, a framework, and then within timing. And how we add this to the first piece. And the first piece, what we looked at was, and I just want to clean up here. The first piece what we looked at is market maker models. MMXM. I'm going to draw up a couple of these. Clone. So you have to be able to put two together. And I'm going to fit this whole 9-piece puzzle for you guys all in one screen. Here's the second part. The first part was the MMXM. If you didn't watch the first video, please do so. Otherwise, this won't make sense. This is a sell model, buy model, whole models completed. Again, buy model, sell model, whole models completed. Again, this is fractal. Sell model, buy model, whole models completed. Here, this is a higher time frame sell model currently. Price sells off, comes back into premium, and then continues on down. And again, this is a short-term buy model. This is so important to be able to put both of them together, to be able to look at and know when a market maker model is completed, number one, and what area of the schematic of AMD you find yourself in. We want to ideally take part in the distribution phase of things. If you get a bit more skilled and you're aware of where price has been manipulated, and you can see a change in state of delivery and etc., by all means you can definitely participate in the manipulation side of things. But we want the easiest trades to take, and that is definitely distribution zone. So first puzzle piece, MMXM, knowing the sell side and buy side and identifying that, the order flow. And then secondly, we apply AMD, accumulation, manipulation, distribution. We fractalize it. Asia, London, New York, AM, or lunch, New York, PM1 and New York, PM2. It's just an easier way to break down the markets and capitalize, I guess, on the low risk, high probability trades. And that's it for me. That's the second piece of the puzzle. Please remember to like, subscribe, hit me a comment. I will make sure to get back to every single one of you guys. And that's it from me. Check you guys in the next video. Cheers.